Welcome back to Kroll and Partners, where we explore the intersection of geopolitics, macropolicy, and capital flows. Today, we are diving into a structural and emerging theme in global markets: capital rotation across small and mid-cap equities in 2025 and 2026, and why this matters in fragmented world. This isn't about the headlines or short-term price moves. It's about strategic shifts in where capital values are being allocated and how this reflects deeper economic and geopolitical forces. The unholding rotation landscape in 2025 markets showed dramatic contrasts across regions and market segments. We saw a powerful rebound in the US small caps after early year volatility, consistent mid-cap gains in the UK, and in Canada, an explosion run among junior resource and commodity-linked stocks. What ties this together is not randomness, but a structural rotation of capital responding to macro policy, geopolitical realignment, and shift in valuations. So, what about drivers behind the shift and monetary policy and cost of capital? Federal Reserve easing expectations in late 2025 and early 2026 reduced borrowing costs. These historically benefit smaller and more domestically oriented companies, as they are more sensitive to financial conditions than large multinational firms. And valuation and dynamics. Small and mid-cap valuations have lagged large cap tech for years. As broader markets rebalance, valuation gaps create arbitrage opportunities for disciplined capital. Macrostructural themes. The geopolitical fragmentation has reshaped supply chains and investment flows. Commodity demand from electrification and AI infrastructure deployment boosted resource-linked equities, especially in Canada. Regional flavor of rotation. United States Russell 2000 rebound. In the United States, the small cap benchmark oriented a notable recovery after first quarter 2025 turbulence, driven by reshoring trends, fiscal repricing, and anticipation of industrial policy. United Kingdom FTSE 215's steady path. Mid-caps in the UK delivered steady returns, reflecting defensive value rotation and amid persistent global uncertainty. Canada, TSX, Venture, and the commodity story. Canada's junior miners and resource names boomed partly due to their exposure to geopolitical supply chain shifts and the emerging global demand for critical commodities. What these rotations really signals. This isn't simple sector shuffle, but it's a scene of capital allocation toward segments that thrive under new macro and geopolitical conditions. The first, monetary easing that benefits leveraged small and mid-sized enterprises. Second, a shift from narrow mega-cap leadership toward broader market participation. Third, strategic demand for commodities and industrial inputs. Fourth, policy-driven alignment of national and regional value chains. These patterns show that the market is not just reacting, it is structurally repositioning across geographies and business models. So, risks and structural consideration. Of course, rotations aren't guaranteed linear progressions. Risks persist. The first risk is policy discontinuities in 2026 could after the capital trajectory. Second, geopolitical escalation can reverse sentiment quickly. Third, commodity cycles are inherently volatile. Fourth, small and mid caps can overshoot during brief risk on periods. The key is disciplined risk management and an understanding of deeper drivers, not just price actions. What this means for investors. The big picture here in that capital is not random, it follows structural signals. In 2025 till 2026, small and mid-cap segments have become the nodes of capital relocations and markets just to evolving monetary, fiscal, and geopolitical landscapes. But today we have only scratched the surface. If you want a complete data-baked framework on this theme, including comparative charts, valuation context, and strategic variables for 2026, I encourage you to read the full article on Kroll and Partners. It's rich in institutional insights and connects these rotations with the broader macro trends. Thank you for listening. Subscribe to Kroll and Partners for more strategic and structural market analysis.